Good day. This is Mr. Moibi, the financial account teacher. The topic we are going to look at this morning is bank reconciliation statement. That's a treatment of overdraft in bank reconciliation statement. But before I proceed, I would like to make reference to our previous lesson. In our previous lesson, we discussed about bank reconciliation statement, starting with balance as per cash flow. This bank reconciliation statement can be defined as the statement that is prepared by an account holder for the purpose of finding out the differences between the cash flow and bank statement balances. So, because for the purpose to reconcile the two balances. So, there is need for the bank to reconcile the cash flow, which is also called passbook, with bank statements in the bank. So then we also discuss about bank statement. Bank statement is a periodic statement sent by the bank to the customer, showing the financial position of his account as at given date. We also discussed about reasons for bank statement, bank reconciliation statement, where we have unpresented check and we have uncredited check, dishonor check. Then we also discussed about standing order, dividends, and so on. Then we also discussed about the balance, adjusted cash book, where we have balance brought for our debit side. Then we also have, credit transfer or direct debit to debit side. Then for the credit side, we have bank charges, dishonor check, uh, dividends, and so on. So I will subtract them from the balance of debit side. Then at the end of the day, we arrive at a balance carried down at the credit side. We proceed to the bank reconciliation statement, and we brought down the balance in the adjusted cash book to the bank reconciliation statement. Then we had unpresented check, and then we less uncredited check. At the end of the day, we arrive at balance as per bank statement. So we discussed about this in our previous lesson. So for this week, I want to look at bank reconciliation statement. You can see it in my screen here, here, treatment of overdraft. So we'll be looking at this, but before I proceed, let me share the lesson objective with you. At the end of the lesson, students should be able to define bank reconciliation statement, state the layout of bank reconciliation statement when starting with the with overdraft as per cash book. Then prepare overdraft adjusted cash book. Lastly, reconcile cash balance with bank balance. So then we are also going to prepare the bank bank reconciliation statement. So that is for the lesson objective. Then let us look at the meaning of a bank reconciliation statement of an overdraft account. Overdraft means overdrawn of a bank account. So simply means when you withdraw more than what you have in your account. It is also the nature of a loan granted by the bank. So this overdraft is, is in form of loan given to the customer by the bank. So it's in form of loan. That loan given to you is more than what you have in your account. So an overdraft is treated as negative figure. So when you are, anytime, my student, anytime you see an overdraft, you have to know that it's a negative figure. So on a bank reconciliation statement, then the customer is also allowed to draw from his account over and above his balance, subject to a limit agreed upon. So it will depend on what the bank allow the customer to withdraw from his account. So when you withdraw more than what you have in your account, when you withdraw more than when you withdraw above or over what you have in your account, that simply means overdraft. So that is overdraft. Let us look at the treatment of overdraft. Overdraft occurs when the customer has withdrawn more than what he has in his account. So when you withdraw more than what you have in your account, for example, now you have 500,000 in your account, and the bank manager allow you, giving you in form of loan, 1.5 million. So 1 million is more than what you have in your account, giving you 1.5 million to do a reasonable distance. So that's an overdraft given to the customer by the bank. Then the cash book will show a credit balance. So the cash book, the balance, you see the balance at the credit side of the cash book. Then the procedure need to reconcile will be a complete opposite of the, the last topic that we treated as balance as per cash book is opposite of it. So we are going to look at the question we are given here. The format. This is the format of overdraft adjusted cash book. You can see that on debit side here, we have payment of account, credit transfer debit side, dividend at debit side, receipts under cash at debit side, interest receipt at debit side. Then for the credit side, we have balance brought forward, bank charges. This balance brought forward, if the account is not an overdraft, if the cash book is not an overdraft, then the balance brought forward will be at debit side. Simply because an overdraft, then to be at the credit side of the cash book account. So we have bank charges, we have interest payment, standing order, dishonest check. Yes, it is possible for the bank to dishonor the check as a result of irregular signature, or if there is no sufficient cash or amount in your account, or amount written in figures different from what has been written in words. So the standing order is possible for the for the account holder to give an instruction to a company to pay, maybe for insurance company to pay into your account, instruction given to them to pay on your behalf to your account, into your account. So we also have receipt of account, we have payment of account, then we have direct debit. Then by the time we subtract it from the balance of the debit side, then we have balance carried down. So that is for the layout. That layout is the same thing as the format. Then let us look at the so bank reconciliation statement. The balance we have as our balance balance as per cash book. Then we are going to represent it as overdraft as per cash book. Then then you had uncredited check. You must know that in our previous lesson, this uncredited check will less. But for this type of account, you had this uncredited check. Then you less unpresented check. These are the checks that are yet to be presented. To the bank. So you less it. If it's balance as per cash book, then you add. Then at the end of the day, we get balance as per bank statement. So then we also have the combination of this account. If the examiner asks you to prepare, not to prepare the adjusted cash book, but you are asked to prepare the only bank reconciliation statement. So you are going to combine the account into just only single account. So this is the account under here. Another format that is you are going to start with the overdraft as per cash book. Then you have unpresented check. Then you are going to you are going to have all these items under the unpresented check. The items like standing order, bank charges, dishonest check. So add everything together with the balance of overdraft as per cash book, then less unpresented check. Then we are going to have all these items under the unpresented check. We have dividend, credit transfer. Then at the end of the day, subtracting from the balance that we have from the unpresented check, then you are going to arrive at overdraft as per bank statement. So this is the format of this topic of a draft of a bank reconciliation statement. Uh, then let us look at the question that we are given here. You can see on 31st December 2010, the cash book of a trader showed a balance of 4,000 4,780. OD simply means overdraft, while its bank statement showed a balance of 4,020 naira OD. OD is the same thing as overdraft. It was discovered that the following transaction was responsible for the discrepancy between the two balances. So that means the cash book does not reconcile with the bank statement. Then we are going to reconcile the two accounts now, the adjusted cash book as well as a bank statement. So we have the first item here, check issued amounting to 770 naira had not been presented for payment. Yes, that's unpresented check. This check, has not been presented for payment in the bank. So then B, check for 1,190 naira were entered into the cash book and paid to the bank, but had not been cleared. That is uncredited check. They have not cleared this check. So that is uncredited check. I didn't mean that this check has been credited. I didn't mean that they have cleared it. This check should have been credited to the bank statement account. So we also have standing order. This standing order with the bank for a subscription for insurance premium, 570 naira, was not considered. So, and there is need for the bank to consider it because instruction has been given to the bank to pay this any subscription of insurance into the owner's bank account. But they are yet to do that. Then item D here, bank charges of 300 naira were entered in the bank statement only. So these bank charges, that is charges from the bank. So 300 naira. The bank is yet to credit this account in the bank statement. So then we also have dividend of 2,015 naira collected and credited by the bank, did not appear in the cash book. And the dividend should appear after you might have buy shares from the reputable company, then the shareholder will be expecting dividend. And this dividend, maybe instruction have been given to that company that they should pay directly into your account. The bank has yet to do that. Then let us reconcile the two accounts, the adjusted cash book as well as a bank statement. Then at the end of the day, we are still going to have a combination account for that is consolidation account. Consolidation account simply means the two accounts, we are going to combine it, the adjusted cash book as well as a bank reconciliation statement. We combine it, and at the end of the day, we are still going to arrive at the same answer. Mind you, bear in mind, my student, that we must at the end of the at the end of our account, the two accounts, we must get 4,020 naira. So failure to get this answer, that means our account is not correct. So let's start and let us look at how we are going to arrive at this 4,020. Bear in mind 4,020 naira. So 4,020 naira. The account you are required to prepare here, you are required to prepare 1, adjusted cash book, 2, bank reconciliation statement. Now, I decided to combine the two accounts together because in any external exam, you can be asked to prepare only one account. If you're asked to prepare only one account, so that you don't make it difficult for you to prepare the what is called a combination account, or you can call it a consolidation bank statement account. So let me start with this adjusted cash book. On my screen here, the 4,780 naira, that means the customer has 4,020 in his account. He has withdrawn more than what he has in the account. Instead of for him to withdraw 4,020, he withdrew 4,780 naira. So we are going to have the balance at the credit side here. A balance brought for 4,780. Then standing order given to us, that is 570 naira is here. Then bank charges, the balance charges, or you can call it bank charges, 300 naira. So to be at credit side. So let us move to the debit side of adjusted cash book. The debit side of adjusted cash book, we have dividend, and that dividend is an income to the owner's account, to this trader's account. So we have the amount of dividend of 2,050 naira. So we have only that only that amount at debit side, 2,050 naira. Then the credit side total is 5,650 naira. So by the time you subtract it, 5,650 from 2,050 naira, you are going to arrive at 3,600 naira. So 3,600 naira is our balance overdraft as the bank as overdraft as the adjusted cash book balance. So that is, bear in mind that when we get to the bank reconciliation statement, we are going to use 3,600 naira as our balance, overdraft as balance as a cash book. So you can see it on the screen here. We have overdraft as per cash book 3,600 naira. Then add uncredited check. The uncredited check we are going to add is 1,090 naira because this check has not been, this check has yet to be cleared by the bank. Did not clear this check in the bank. That is uncredited check. So you add the two together, 3,600 naira and 1,190 naira. You are going to get 4,790 naira. Then we are given less unpresented check. Unpresented check we are given, the customer is here to present the check to the bank. So that means that is an unpresented check, 770 naira. So subtract 770 naira from 4,790 naira. So you are going to arrive at 4,020 naira, 4,020 naira. So that is what you are going to get. At the end of the day, you can see that this is our overdraft as per bank statement. Overdraft as per bank statement. Then that is for the adjusted cash book and bank reconciliation statement. So let us look at the combination of the two accounts. The combination of the two accounts means the adjusted cash book and bank reconciliation statement. So it's going to form just a single account, and that single account you can call it a consolidation bank statement, bank reconciliation statement. So we're going to start with overdraft as per cash book. Please, my student, it's either you use the first method or you make use of the second method. So either of the two methods, any method that you use, please don't use the two methods at the same time. Make use of one, except the examiner stated in the question that you have to prepare the only bank reconciliation statement. So if you have to prepare the only bank reconciliation statement, that is only when you are allowed to use the second method. So overdraft as per bank statement, that is the amount you are given, 4,780 naira. Add uncredited check, 1,190 naira. Then we have other items under the uncredited check. That is standing order 570. The bank charges 300 naira. So by the time we sum everything together, you get 2,060 naira. Then 2,060 naira, we are going to subtract. We are going to add it with 4,790 naira. So when you add 4,780 naira and 2,060 naira, so you are going to get 6,840 naira. Then mind you, we still have a less unpresented check. The less unpresented check, we have 770 naira. Then we also have just only one item under the unpresented check, that is dividend. And the dividend we are having is 2,050 naira. So when you sum the two together, you are going to get 2,820 naira. So 2,820 naira. When you subtract it from 6,840 naira, you are going to get 4,020 naira. So either of the two methods, you are still going to get the same balance. So you can see this is the first method, 4,020 naira, and this is the second method, 4,020 naira. So that is how, very simple. Account is very simple, depend on how, even mathematics depend on how you handle this subject. So I wish you best of luck, my student. For you to know more about this topic, please uh, simply buy this textbook. If you have the textbook, fine. You buy this textbook, bookkeeping and accounting, simplify and amplify bookkeeping and accounting by Femi Longe. Femi Longe is a chartered accountant, so you can buy. And we also have essential of bookkeeping and accounting for senior secondary school. So, my student, keep yourself safe and save away from this disease. God will be with you. See you next time. Bye for now.